something people need to understand about gold is its absolute scarcity. This is an incredibly scarce element. Now, if you take every single piece of gold in the world, so every semiconductor, every necklace, every gold coin, every gold bar in the vault, melted it down, put it in one spot, that would fill just 2 Olympic swimming pools. What we're told by the geologists is that there is only one more Olympic swimming pool full still to be mined, and then it's gone.
Whoa. Let me just think about that for a second.
Today's guest is here to talk all about gold, what's happened with gold, a lot about what people can use gold for that they don't think about, and how it's such an important asset class.
It's important for people to know that the gold account providers have evolved quite a bit. People are able to use gold as though it is a currency, and it looks a lot like a regular bank account. You can earn cash back, you can earn loyalty points, you can use it to make payments, you can earn some interest on it. So I think little by little, the digital physical gold is becoming money again.
This guy knows a lot about finance, he knows a lot about wealth, and he knows even more about gold. And I promise you, this episode is really going to change your view about how you think about gold. So welcome to the show, Mark Pey. Hi everyone, and welcome to this episode of the podcast. Before I start, have you subscribed yet on YouTube? If you haven't, it would mean the world to me if you did. If you're listening to this on any of the podcast apps, Spotify, or whatever it may be, please do me a favor and leave a review, give us a follow, or give me engagement in some way. Maybe you don't even like it and it could be improved. I'm happy to listen to that kind of stuff too. But if you give us a follow, you give us some engagement, you give us on YouTube a like or subscribe, it would really, really help the podcast grow. Okay, moving on to the show. Okay, folks, let's talk about real estate. Now, a recent partnership that we've just established on the podcast is with AYS Developers. Luxury properties with high-end finishes from people that really understand the subject. Often in Dubai, you'll find stuff that is maybe substandard. With AYS Developers, you're not going to see that. You're going to see fantastic properties that you can buy, you can invest in, you can make a home on Dubai Islands and other places too. So go visit aysdevelopers.ae and check them out. I promise you it'll be worth the trip. Mark, thank you for coming to join us on the show today.
Happy to join you.
Let's talk about gold.
It's a big subject. There's a lot of history. There's a lot of kind of misconception. So happy to kind of start at the beginning. I think people apprehend gold in different ways and they learn about it. Everybody sort of has their journey in their understanding of it. But I think the top thing to keep in mind is if you decide not to own gold, you're making a bet against something that has worked for 5,000 years.
Okay, that's quite a statement to start with there. Is Mark selling the gold for us all? Who knows? Right. So Mark, welcome to the show.
Thank you. Happy to be here.
So we're here to talk about gold today, the big monetary subject of gold. So tell me, why gold?
Yeah, so gold, investors turn to it because it works, and it has for 5,000 years. So this is something that has maintained value over that long time frame through the Black Plague, through World War II, World War I, through all the calamities of the world. And so it's just been the go-to asset that has done its job, year in and year out. Yeah.
And so how did you get into gold?
At the GFC, 2008, 2009, I think like a lot of people, I sort of wanted to understand more about like what happened. What was the nature of that thing? We were sort of going along. There was a lot of prosperity, and all of a sudden, the banking system broke. Yeah. And I think as you pry open kind of how things really do work in the world, you have kind of the investment layer, you have the banking layer, but then you have, what's underneath there, which is currencies and money, and what's the nature of money. And so you have all of the central banks in the world have these holdings of gold. Well, isn't that interesting? Maybe I should have some, So that's kind of how I first arrived there.
It's a really important point, isn't it? All of the central banks around the world hold gold. Why wouldn't I? You think about that. That's really significant because most people won't know that the central banks around the world hold gold, but a couple of YouTube searches and you'll see some videos on it, right? New. So why do you think people have shied away from it, or they haven't got involved in gold in the way that maybe they should?
I think you have to divide that answer into the East and the West. Okay, in the West, there's been a lot of emphasis on paper assets. So let's call it shares and bonds, and this has been really the thrust for the financial world, the investment advisors. Let's invest in the share market, let's invest in the bond market. I think in the Eastern cultures, it's been much more common to say, wait, we're going to start with gold holdings. Yeah, that's the basis, that's the foundation of wealth, and then sure, you can buy shares and things on top of that. So there's really a very different psychology in those, spheres. And so, in the East, you've had a lot of trouble with the local currency. So you look at, for example, the Indian rupee currency has declined every year since it's been issued. And so people have a lot less confidence in the local banking, local currency, as compared to something like US dollar world, where year in and year out, the dollar is going to sort of be available and it's sort of valuable. And so, you didn't have much to worry about. And so I think, what people need to raise their awareness about is kind of what is the currency that I'm in, and what it's like, what's the nature of my holding? I may have shares, but they're denominated in a currency. Could be in dollars, could be in euros. I think people that are international people, certainly Dubai audience, they have a higher awareness than you would have amongst people in the UK or in the US, where they're just used to holding dollars or used to holding pounds. Yeah. Mm-hmm. So you have a choice. And one of those currencies that you can hold is gold. Yeah. Now, if the central banks all hold gold, well, you have to ask, well, why would they own that asset? And they own it because there's no counterparty risk. It's valuable no matter what anybody else says or does. Yeah. You don't need a government to say, oh no, this is worth this much, like a dollar is, and things like this. So it has value in and of itself and intrinsically. I'd say the other thing is that it's a multi-generational asset. It's something that you can own, and that when your kids and your grandkids, then inherit that asset, it's going to be valuable. Yeah. It's something that has worked for 5,000 years. And so, it's, you look at the world of crypto, it's been around for about 15 years. That's a pretty big difference. There's been a lot of money made in crypto. It's a very fascinating space. We suggest that people should look to gold first and then, speculate on top of that. Yeah.
Now, there are traditionally 5 asset classes, which we know of, and then the crypto became the 6th one over the course of more recent times. But we've got the foreign exchange markets, we've got property, real estate market, the equity markets, the fixed income markets, and the commodity markets. Mm-hmm. Now, with those 5 different asset classes and people not knowing where they should invest and how they should invest, typically it goes back to this old adage, is your product the best product or the best marketed product? And arguably the stock markets have been the best marketed of those 5 asset classes over the years. So people have lent into the stock markets more. If I was to ask, if I was to get my 10 neighbors to come and have a cup of coffee with us right now and say, come and sit down with us, name a commodity, I'm sure many of them would struggle. So is the reason people haven't put gold at the forefront of their mind in the West, from what you're saying, a lack of education, a lack of awareness, a lack of understanding? Or is it just because the equity markets have been marketed to them heavier and easier?
I'd say it's partly that the equity markets have been marketed very heavily, but I'd also say that the banking system and the powers that be have over many decades, marginalized gold in the West. Yeah, though it's a pet rock. You had, Ben Bernanke, the head of the Federal Reserve. Oh, it's a pet rock. Yeah. No, honestly, it's not a pet rock. Now, your comment though is interesting of the different 5 asset classes. I think people should think about, what do I own? What is it that I own? So when you own an equity, right? You own shares. You own part of a company. Yeah, you're part owner of a company. You own their cash flows. You own their product lines, everything, right? So this is something that people can really kind of, get their heads around. When you own gold, you own an asset that is valuable for 5,000 years. When you own bonds, you own a promise by somebody else to pay you later. Now, hopefully they're good for that promise. Yeah. So I think with any of these asset classes, you have to really think about, what do I own? What do I actually own?
Well, let's just break that down for a minute. So if we talk about currency, then that's paper. Okay. So with the Forex markets, that's all paper. Equity markets, that's pieces of paper in companies that other people are going to run, okay, you have to rely on those people running those companies. A piece of paper to go up in value.
Yep.
If you take the real estate markets, okay, people think they own bricks and mortar, and so that's their asset that they feel they can see and touch. But do they own a leasehold or a freehold? Because if you own a leasehold, you own a piece of paper, don't you, at the end of the day?
Yep.
So what we've got through fixing the debt, bonds. So bonds essentially are loans. And so what do you own? You own a document that's lending money to some company or some country, okay, on the promise that that money will be paid back. And then you've got commodities. And so if we then look at commodities, we're talking about gold, but let's argue as well for the silver, the palladium, the other precious metals. Let's argue for oil as a non-perishable commodity. When we look at those, why is gold better than oil or better than silver or better than palladium or titanium or whatever?
Yeah, I'd say there's a couple things. So the first is that the markets for gold are unbelievably deep and broad and global. It's something like a $15 trillion market. So gold is something that in any condition you are going to be able to sell, and sell at a price that is reasonable. That's not far discounted or far premium. So it's an unbelievably liquid market with an incredible amount of depth of trade. So it's almost as much as the Standard & Poor's 500. I mean, this is a huge amount of trade. Now, the other thing about gold is that it's accepted everywhere, okay? I can go to a village in remote Thailand and say, would you like some gold? And they're going to say, yes, please. They know exactly what it is. They know exactly what you're talking about. They know it's valuable and they want it. So this is an asset that's super liquid. I would contrast real estate, okay? So I happen to have sold a house not that long ago out of Australia. It took me a year. So now maybe that's because the price was wrong. Now maybe the market conditions, whatever it might be, but there was not liquidity to that asset. So here in the case of gold, you have an asset that's unbelievably liquid. I think that's one of the main aspects about it. Being so liquid, there's the difference between the buy price and the sell price is very small. Yeah, so that's one of the aspects. Now, would you want to own it in preference to, let's call it silver, platinum, palladium, the other commodities? Our view is that gold is the king of the assets, and that should be, form the basis of what people do. We actually have a good opinion of silver. Silver is interesting because it's consumed when it's used in industry. It has more than 1,000 uses in industry, and the silver is consumed. In other words, it's gone. So, for example, when it's used in a solar panel, it ends up in a landfill. It's not recovered. Now, the supply of silver in the world has been in deficit for 5 years. In other words, they're using more than they're producing. You've had even people say that in 20 or 30 years, silver will be extinct because it's a commodity that's getting consumed by all kinds of, high-tech applications. So silver is super interesting. Platinum, palladium, I can't really comment on. Those are very thinly traded markets. So, yes, it might be something that you might want to hold,
Well, let's just think about that for a second. You said earlier that most central banks are holding gold. Are they holding silver? Are they holding platinum?
No.
They're not?
No.
Okay. Are they holding crude? I know. We've got OPEC and we've got a whole other conversation around what goes on with various governments around the world. But
Sure.
I'm pretty sure at the Bank of England they're not sat there underneath in the vaults with that's the gold section
And there's the crude.
Some barrels of crude there, but there.
Yeah.
So you're highlighting to me more reasons why gold is important, and what you said earlier was quite interesting about countries that they don't trust the currency.
Yeah. Yeah.
And I think this is something that I find really interesting, and for people to know. If you trust your currency, you're in the West as they do because you believe it's more stable, you're less likely to hold gold. If you don't trust your currency, like India and the rupee, you're more likely to hold gold. But is the person that trusts the currency in the West being fed a lie because they don't really know how safe their currency really is? And the reason I say that is because we had COVID, we had financial crisis, and on and on and on. Print money, print money, print money. I'm not sure you can print gold, but I'm pretty sure you can print money.
No, you can. And so I'll just say the supply of gold is an interesting story, right? As compared to, bank currency, you can print unlimited quantities. The supply of gold, the world supply of gold, what the geologists tell us is that 2/3 of it has been mined. Yeah. So there's about a third left to be mined. Now, if you melted every piece of gold in the world, I mean, the statue of Tutankhamun, the gold coins in the world, the necklaces in the housewife in India, if you melted all of that gold up and you put it in one spot, it would be the size of 2 Olympic swimming pools. It's an incredibly rare asset. Yeah. So you cannot print more of it. Okay. Yes. Now, the other thing is that when they search for gold today, nowadays, mining companies, they're digging 10,000 feet underground. Okay. So this is an asset that as you say, you cannot print. You were talking about currency crises. Now, we're used to, if you follow the financial news at all, you hear about a currency crisis in a place like Argentina. Well, when you have, 190% inflation, what you do is you take your money out of the bank in the morning and you stand in line for the bank that's paying 15% daily interest because that's the only way to try to maintain the value that you have. A currency crisis is an incredibly destructive thing for a country. And so it used to be that the currency crises we'd see were in places like Argentina or Turkey, these other places. Those crises are slowly creeping up to the main currencies. I would say that last year you had a currency crisis in the US dollar. It lost 24% against gold. Okay, so that's a very big, loss right there. So I think the quality of bank currencies around the world is declining overall, and it's a bit, as they call it, the cleanest dirty shirt. Now, the cleanest dirty shirt, of course, is the U.S. dollar. Yeah, there's a lot of gold commentary that says, "Oh, the dollar and the dollar's going to go away and dollar's going to default." All these things. We think that's rubbish. There's unbelievable worldwide demand for dollars. Everybody needs to pay their bills in dollars, do international trade in dollars. When was the last time we saw something in huge demand that all of a sudden goes to zero? Yeah. So we're just not apocalyptic believers like that. It's very instructive, I think, to see that the central banks of the world, the guys who know the most about money and the dollar system, are buying gold hand over fist. Okay. So these are the experts. And, you can kind of, do what I do or do what I do as I say, right? See what their actions are. I think something people need to understand about gold is its absolute scarcity. This is an incredibly scarce element. Yeah. Now, if you take every single piece of gold in the world, so every semiconductor, every necklace, every gold coin, every gold bar in the vault, melted it down, put it in one spot, that would fill just 2 Olympic swimming pools. That's all the gold in the world in one spot. Yeah. Now, what we're told by the geologists is that there is only one more Olympic swimming pool full still to be mined, and then it's gone. Yeah.
Whoa.
So
Let me just think about that for a second. So you're saying there's every single piece of gold anywhere that's ever been mined in any capacity, however it's been used for industry or for decoration or anything. If you melted everything, it would just fill up 2 Olympic-sized swimming.
It's an incredibly rare element. Yeah. Now, that's not me saying that. That's the U.S. Geological Service that tells us this. Yeah.
But when we watch these TV shows, these mining shows, when they're over in Canada or Alaska or something, and you got the guys out in the mine and they're digging up the pay dirt, and that's getting, put through the hopper or whatever it is, the system that it goes through, and they're there and they're like, yay, we've got, $800,000 worth, and they pour like these 2 jars basically on.
Oh, sure. So they say I got $800,000 worth, and they put it in a pile, and the pile's this big.
Yeah.
It's incredibly value dense item. Yeah. So it is quite fascinating. And gold has some natural qualities that have made it valuable. Okay. So it's chemically immutable, which means...
What does that mean? Yeah.
It means it doesn't combine with other elements, which means it doesn't rust. Okay. This is critical. So if a farmer in medieval England buried a bar of gold, and then, the war came and everything, and then afterward he dug it up 20 years later, it's still a shiny bar of gold. It stays the same. And this is the thing about gold. This is what it does. This is its value proposition. Gold stays the same. It's chemically immutable. It's stable, right? It's inert. Now, when people look at the gold price, we think of it priced in dollars. The analogy is, you're on a boat. Yeah. The boat is slowly sinking. There's some waves rocking you up and down, and you're looking at the lighthouse. Oh, look, the lighthouse is going up and down. No, it's not, right? The lighthouse stays the same. The paper currency, the share market, whatever it might be, the financial asset is gyrating and rocketing downward. So last year, down 24% in the world's main currency, the dollar. So that's really the analogy is, gold, and that's the fantastic natural quality of gold is that it stays the same. That's what it does. Yeah.
It's really interesting when you think about it, because I think you have to sit and consciously think about stuff like this to see the impact of what these things are. Now, obviously, you might have some crypto fans that are watching you and I, listening to you and I right now, going, yeah, but I can make a much better return if I hold Bitcoin or ETH or Solana or Ripple or something. And you might have people that have invested in Nvidia and Tesla and all these types of the big 7 stocks in the States over the course of the last 10 years. And I've made this kind of return. Gold would never have got me that kind of return. What do you say to people that believe that there are other markets or other opportunities that perform much better?
I think they're absolutely correct. I think people who have bought Nvidia have done had fantastic returns. Yeah. Now, if you look in the crypto world, this has generated unbelievable speculative, returns. I would say that in particular crypto, you've got an asset there that is 15 years old. Yeah. Now, we've heard lots of things about crypto over that time period. It's going to be money. It's going to be the great new payment system. It's really turned out to be none of those things. It's going to be, if it was the greatest new transaction processing thing, then Apple would use it, Microsoft would use it, Amazon would use it. They don't. Okay. So it's not really a transaction processing platform. It's not really money. Yeah. It's not really useful in foreign exchange. It's very useful for speculators. Right now, as we speak, I think crypto is off 25% in this sell-off. So previous to that, it had jumped up a bunch. Mm-hmm. Now, luckily, I didn't have a Bitcoin mortgage. I'd be bankrupt.
Yeah.
Okay? So it's not money. Yeah. So now, but it's been a very successful place to speculate over years. I would say just be conscious of what you own. With NVIDIA, you own an incredible fast-growing company. Yeah. So there's going to be ups and downs. There's going to be, blips and sideways. We think of gold as, if you think about constructing a house, we think gold is the foundation. It's broad, it's stable, it's wide, it's deep. Yeah. It's a place for you to start and a place for you to know multi-generationally that you have wealth that is going to endure. Yeah. And you can do lots of things on top of that. You can buy real estate, you can buy crypto, you can buy share market. Yeah.
Let's talk about that for a minute, because it's almost like this pyramid that we have to consider when we build this wealth and financial planning kind of foundation. It's like what goes at the bottom and what goes on the steps along the way. And when we consider cash, a lot of people will think money in my bank, but actually money is just a promise, isn't it? It's a promissory note. That's what a note is. I promise to pay the bearer. And they used to have, if you go back even more, you have the gold standard. So it was always tied to gold that they had. People think they've got cash. They think their cash is safe. They think their cash is solid, but inflation eats away at their cash.
When you choose to be in cash or choose to have a percentage in cash, you are making an investment decision. Okay. It's kind of touted as, a non-decision. No, I'm just going to sit here on the sidelines in cash. No, you've made a decision that you want to hold whatever currency you're in. Okay. So for example, dirham or dollars or euros or whatever it might be, you're making that decision that you want to hold that in preference to an asset that has 5,000-year history of outperforming all those things. Okay. So in the gold business, it's now possible to have a very cash-like account. Yeah, where you can denominate yourself in gold, you can make payments, you can use it for transfers, things like this. You've decided that gold is your currency, not the dirham, not the pound, not the dollar. Yeah. So when you are holding cash, you are making an investment decision. Now, that decision was not a great decision last year for dollar, investors. Or how about New Zealand dollar? I think it lost 50% against gold. So that wasn't a great call to hold New Zealand dollar cash.
So let's talk about monetary metals. I want to understand that business, how it was formed, what it does, and how it helps people.
Yeah. So the classic objection to holding gold is that it produces no income. Okay? So every year you have to pay a little bit to store it. So you're kind of going backwards in the amount that you have every year. So we set out a number of years ago to change that. We thought that gold should be a productive asset. It is a productive asset in the world, and it should provide some income. The way we do that is we find companies that use gold productively. So that can be a refinery, can be a jewelry manufacturer, can be a mint. These people have gold in their business. They need it. They finance it. We match those people up with our investors. So our investors have gold. These guys need gold, and they're willing to pay a small fee to get it.
Give me a case study. Give me an example of where that's happened.
Sure. So as an example, you might have a jewelry company. Okay, they're manufactured. And they have raw gold that comes into their factory. It takes them a month to manufacture it into these beautiful necklaces, and then they sell those necklaces. Well, in that month, they have a huge amount of inventory of gold that they need. Now, they can choose to go finance that inventory. They can make a bank loan to try to get the gold that they need. If they borrow currency to own gold, then they have to hedge the price, because if the price goes down too much or up too much, they go out of business.
Mm-hmm.
What we do instead is we lease them the gold that they need for that period. They owe us that gold back plus a little bit of interest. So the investor, they used to be sitting there with kind of a dumb bar sitting in a vault. They now have a passive income stream. They are the owner of gold the whole time. They own the title to the metal, and they get a little bit of income from these various gold using companies.
So let's just be very clear on that. I've got my gold bar. It's sat there. It's in my safe. It's been there for 15 years. I don't use it. I know it's safe. It's my gold. I'm happy.
Yeah.
You take my gold?
So there's a couple ways that we can work. We can actually take gold. We have relationships with the big custodians all over the world. We accept inbound gold. We accept inbound silver, right? Investor wants to earn some income. We can accept inbound metal. And we do that every day of the week. Okay. We then allocate that. We give the investor the choice, say, here is a way to earn 4% on that gold. Would you like it? Yes. You can choose yes or no. Yeah. I will mention in passing here, we also do gold and silver bonds. So a longer time period, three years typically, and a higher interest rate. So typically 12 or 15% return. Now, these are denominated in gold and silver, and the income you receive is in gold and silver. Yeah. So the way to think about it.
You get paid. Oh,
correct.
Oh, you're getting paid in the commodity itself.
That's correct. Yeah, that's right. So, right. So this is a way.
Yeah, hold on, because we went into a space there where I started to think, hold on a minute, you're going into paper. You're going into paper. So you're essentially creating a loan. You're creating debt.
That's right. So just to be really clear, we have two main product lines. One is the leases, which are pretty short term. We are renting the gold to a jewelry manufacturer, to a refinery that they need. They pay us a little bit of income. They pay our investor. That's a lease. Okay, so that's not a financial.
And that term is 3 months, 6 months, something like that.
It's actually 12 months, and you have income that comes off monthly. Yeah, so passive income in gold coming off of that. Then the 12 months is up. You can cash out, or you can roll it to another term. Okay, so that's the lease. On the case of bonds, we might go to a mining company that has gold coming out of the ground. Yeah, so they know that if they're going to borrow bank dollars, oh, gee, what's the price of gold going to be, and are we going to have enough to pay our debt? They know how much they owe back to investors. Yeah, and so those are typically double-digit coupons, and the coupon is paid in metal. Yeah. So we just completed one for a silver mine in Idaho in the U.S. We brought in 32 tons of silver by investors. They committed this silver for this mining project. They're being paid in silver quarterly, and they'll get principal back in 3 years' time. So they'll have 36% more silver. It's silver denominated. Yeah. This is one that is just, I think the way to conceive of it is that, bonds have a currency they're issued in. And could be issued in dollars. Could be a dollar bond.
The first people to pay people their interest in gold.
It was done certainly in the 19th century in the U.S. until everybody moved away from this. But we just think it's kind of a logical step if you understand that gold is money and you understand that it's a currency. So why not denominate things in it, and why not pay people that income in that currency, in that money? Yeah.
Yeah, so we make sure people are clear it's in that currency, which is gold.
So most people don't know that you can generate a passive income in gold or in silver. Yeah, and that's what Monetary Metals is able to do with our customers. Yeah.
So I've got the value of my gold going up, plus I'm making income from my gold as well.
Yeah, that's correct. It actually,
That's like a stock going up in value plus getting a dividend.
well, you're getting more shares.
Oh, yeah, you get paid in shares. All right, so my stock's going up in value plus my payment of my interest is payment in more shares.
And you get more of them, yeah.
Okay.
Yeah, and so, a lot of gold commentators talk a lot about price, and we think people should focus on quantity. How much do I have? And how can I get more? And this is a way to get more, to use your gold to make it productive, right? By working with these businesses that we do an incredible amount of work to vet and make sure that all the controls are in place, and then they provide that income stream that, our investor takes advantage of. Now, we have done now 65 of these deals. We've never lost or misplaced a gram of gold in that whole time. Every single one of those has oversubscribed, which means that there are more investors interested than their capacity to do it. Their company is growing exponentially. Last year, I think we did almost a triple. I think this coming year, we'll probably quadruple in size. Yeah.
Wow.
So, and we've recently opened the Dubai operations here, licensed at DMCC. And so really expanding fast, really great reaction. But
how do people learn about this kind of stuff? Do they have to go online? Do you have intermediaries? Do you have introducers? How does this whole world work?
I'd say, we've done it the hard way, from the beginning, which is to start our company. I think our first lease was for 2 kilos, convince somebody on both sides. So let's try this out. And we've worked really hard over the years to build that franchise and that brand, to build all the controls around it. We got a certification of something called SOC 2, which says that all of our internal procedures are equal to, the biggest banks and the funds managers in the world. So, it's about building that credibility and that trust. And so how do people learn about us? A lot of it's been word of mouth, customers, that use us. And, I think what happens is people, get gold over to us and they say, wait a minute, I just got more gold in my account. And it sort of dawns on them. So somebody might open an account with us, and then within 6 months, they quadruple the size of the account because they say, oh, I see how this works, right? So very exciting. And then we have also distribution deals now. So we have referral partners. We have what are called aggregator partners. We have a deal that we announced here, a distribution partnership we announced here locally with a company called OGold. Now they have a mobile app that you can buy small quantities of gold if you want. And then you can also put that into monetary metals leases. So you can earn some income on your app.
Yeah, so let's ask that question. So what's your typical client look like, and how, could the guy that's got a couple of $1,000s worth of gold, is he a client of yours?
We have a 10-ounce minimum, and the ounce, it's $2,900 an ounce today. So that's almost $30,000 minimum.
Okay, so if he's got $30,000 worth of gold as a minimum, he can be a client.
Yeah, that's correct. And so we have everything from individuals, ultra high net worth, or we have family offices, starting to get a few more institutional clients, particularly on the bond side. So we think the fixed income instrument denominated in gold with interest paid in gold or silver is a fantastic offer for the institutions. Yeah. So.
And what's the risk that people face?
Yeah. So with the lease, for example, we've de-risked that every single way we can. Yeah.
So what is the risk?
Yeah, sure. So the risk is that the jeweler, for example, is manufacturing jewelry. Then the jeweler, let's say they went out of business. Yeah. The advantage that we have is that our gold never sits on the jeweler's balance sheet. Okay. It's as though they are renting a piece of property or renting a machine, let's say. So that jeweler goes out of business, we go and we take our investor gold back. Yeah. So it's what's called bankruptcy remote. Okay. Now, what we've done is if all of those controls and all of those processes somehow fall over, we now have an insurance policy that wraps all the way around it by one of the leading global insurers. So we've really de-risked it. I think if somebody says something's no risk, you have to run the other way, because it's just not so. But this is a nice 4% return. We think that the risk is extremely low. Now, in the bonds and the fixed income, so 3-year duration, those are a riskier proposition, no question about it. Yeah, but you're getting a commensurate reward. So this silver bond, 12% silver, paid quarterly, and so after 3 years, you got 36% more silver in your account. Paid in silver, and then you get the maturity, the principal. Yeah.
Okay. Let's talk about the dirty side of gold. Gold has been, for many years seen as very glamorous, but there's also how gold is mined and the stories that we hear coming out of various countries in Africa about the way that child labor is involved and people are treated.
There are some very substantial rules around what's called responsible gold. And that has to do with how it's procured, or how it's mined, or how it's processed, or how it's brought to market. Yeah. The UAE regime is probably the strictest in the world for the responsible gold supply chain, integrity. Yeah. And that means there's no conflict gold. This means there's no, use of cyanide in the processing, things like this. Now, the Ministry of Economy stepped in not long ago and closed 32 refineries here for violating that responsible supply policy.
Wow.
So they're dead serious. Yeah. And so, I think that UAE is probably the best regulated gold market in the world right now, better so than London and New York. You're right, there is a darker side of gold that's in what's called the unofficial sector. There's smuggling, there's all those things. We don't deal in any of that. We deal only in the official sector. So officially, sanctioned, but also responsible gold. So no conflict gold and no, harmful, processes. Yeah. Yeah.
Okay, and going back to how people should consider gold as an asset, if someone's got a pie and they've got different asset classes they can choose within the pie, and gold is one of them, what percentage of the pie do you think should be gold?
There's some really good academic work that's been done on this with Sharpe ratios, things like this, that measure risk and reward, and particularly downside risk. So what that found is that you can go somewhere between 8 and sort of 12%, add that amount of gold to a standard portfolio of shares and bonds, and it actually enhances return while reducing the volatility risk. So that's sort of the sweet spot. Yeah. Now we routinely see investors, particularly in this part of the world and across, Eastern countries, that have upward of 25% or even more. Yeah. And it's been a good bet for them, particularly as compared to the local currency and sometimes their local share markets. So that's sort of the sweet spot. If you say 8 or 12%, where you're now increasing the return of the portfolio and you're reducing the price volatility. Yeah.
Got it.
Yeah. Yeah.
People have been bombarded with information over the years. They've been able to invest in so many different areas. Whereas I know when I first got into the business of financial advice and wealth management, access to information was very limited. You can open a trading account with 7,000 different options of what to do with your money. And you could buy and sell in a moment's notice. And whether that be crypto or stocks or any type of investment, Forex as well. But I find that fund managers never tend to perform as well as they could. Okay. They never outperform the markets. And people have so much information at their fingertips that they invariably, become paralyzed from all of those options available to them, which has them sat in there procrastinating over and over again. What do you know about this kind of stuff?
So I think there's probably two things to say there. One that has to do with emotions, right? You're either paralyzed or you jump into action that maybe you shouldn't have taken. Yeah. Now, what's interesting is Fidelity Investments, I think the biggest fund manager in the U.S., did an internal study, and they wanted to determine which of their, what segments of their customer base had the best returns in their portfolio. Now, they found two segments that outperformed everybody else. The top performing segment was their deceased customers. The number 2 performing segment was the customers who had lost their passwords. Now, that tells you something about the psychology of receiving lots and lots and lots of information, of doing things for emotional reasons at the wrong time. Yeah, it's a real insight. Now, I'm not saying that we should aspire to be the deceased customer, but even the guy who lost his password. But I think you make a plan and you stick to it. Yeah, and not worry too much about the headlines. Yeah.
It's that chopping and changing. It's you tinkering with your own stuff when you don't really know what you're doing, when you think you do, that stops you getting the growth.
That's it.
And that's why arguably buying gold, sitting on gold and just leaving it there, is a much safer bet for you against yourself, if anything else.
There's one word that we think sums up what somebody's strategy might be about gold: accumulate. Very simple, accumulate. Yeah, this is an asset that is going to be here tomorrow, no matter what. Yeah. This is an asset that the world is turning to. Actually, they're turning away from the other assets, including bank currencies, share market struggling, things look very toppy. The bond market, we're in an unbelievable, global debt bubble, right? So accumulate. And so to us, it's about quantity. How much do you have? Yeah.
Last question I've got for you. Okay, if people want to buy gold, okay, there's different ways they can do it. And again, that can be overwhelming as well.
Yeah.
One of those ways can be buying gold that they actually hold, which is kind of like the kind of more mechanical, traditional way of doing it. Even some people will be confused by that. But if the average Joe sat there, he's got $100,000, he wants to buy some gold, okay, what are his options in terms of how he buys it? Nice and simple for me, please, so I can make sure everyone understands.
So the classic is you rock up to the gold dealing shop, you buy the bar, you take it home, you put it under the bed. Yeah, safe under the bed. Presumably you have home insurance, things like this. The issue with that, a couple of issues with that. First is that someday it has to come out from under the bed and you want to try to get cash for it. Now, the guy you're going to bring it to, he doesn't know if it's really gold. So he has to do a test. You're sort of out of the system. Okay. So it feels good. You bring it home, but you're kind of stuck and it's a bit of a one-way of a dead end. Yeah. Now, there are lots of apps and companies nowadays that very simply you can bring cash over, you can buy gold. I'd say one of those companies certainly is Monetary Metals. So the process for us starts off with procuring gold on behalf of our customers at excellent local prices, which we then present the opportunity to earn some income on. That's what kind of sets us apart.
That's the second part of it, though, which is great. I talked about that. But for me, it's like, they can open an account with you or one of any other companies out there. They open the account, they do all their KYC and stuff. They get their money put onto the account, and then from the account, they're buying the gold or whatever the best price is that you or anybody else can get. Right. And that gold is being held in custody.
Correct.
So they're not actually having to worry about that money, that being under the bed. It's on an account. It's in custody.
Depending how that dealer's organized, and most of them are doing it this way, they are the individual outright owners of physical metal. So if something happened to that provider, it's still their gold. Yeah, very important. Yeah.
Yeah.
Now, there are other ways to own gold in the financial market, for example, ETFs and funds. Yeah. What you own there is you own a share with a custodian, with a clearing agent, with all kinds of counterparties that have to perform for you to get your value. Mm-hmm. Yeah. So what we see more and more is people want to own the real thing. They own it outright as property, as in their individual property, their individual holding. And because it's become a lot more useful in those accounts, you might be able to borrow against it. You might be able to earn some income from it, right? So the world of gold has evolved pretty well in these last 10 years so that the providers are much more, what you'd say modern. Yeah. Yeah.
Got it.
And there's some very good ones out there. Yeah. Well, so I think it's important for people to know that the gold account providers have evolved quite a bit so that people are able to use gold as though it is a currency. And it looks a lot like a regular bank account. You can earn cash back. You can earn loyalty points. You can use it to make payments. Yeah. You can earn some interest on it. Yeah. So I think little by little, gold is coming in. Physical gold, the digital physical gold, is becoming money again. Yeah. And so there are some really successful app companies that are doing this out in the world. And so, as it looks more and more like money, people make the decision, hey, should I hold dirham? Should I hold dollars? Or why wouldn't I hold the world's oldest and most stable currency?
Today has been kind of like a real kind of like binary conversation about this one particular asset class. And within that asset class is one particular commodity, and the one that is known by everyone around the world. I'm fascinated to spend time learning more and more about it. And for me, when I look at my takeaways, it's like, number one, okay, it can be used so many more ways than you think it can. Number two, I had no idea that I could get interest if I held gold as well. I always thought it's the value of the gold going up that where my growth was coming from. And number three, the fact that it's just also much easier than I ever thought.
Yeah.
Mark, thank you so much for coming on the show today. It's been a great education. So I've sat there, I've been schooled. I love it. I wanted to come back and give you loads of arguments for loads of different stuff, but you've well and truly schooled me. So I'll take my hat off, sir.
I would be happy to come back. Thank you very much, Spencer.
Thank you. This episode is proudly sponsored by Allsop & Allsop, Dubai's leading and largest real estate brokerage. Now, with over 16 years in business, Allsop & Allsop have transformed the real estate experience for thousands of buyers, sellers, landlords, and tenants. By leveraging cutting-edge technology and data-driven insights, they are the consistent driving force behind the growth of Dubai's real estate sector. Their unmatched expertise and industry knowledge empower clients to navigate the market with confidence, no matter what their needs. Committed to finding your perfect home, they, without exception, ensure your real estate experience is as seamless as the property itself. Whatever your property needs, keep moving with Allsop & Allsop, the trusted choice in Dubai real estate.